Hi everyone, this is Jason Burak of Wall Street for Main Street, and this is your weekly commodities market wrap-up for the week of June 11th, 2010. Earlier in the week, gold attempted a humongous breakout. It even had an over $25 an ounce pop in one day, and that was met with a humongous sell-off back down to its current levels. It's still consolidating, technically, and it's going to attempt another breakout, obviously, as the euro continues to devalue, and there's more risk in Europe as well as elsewhere. There was also a big United States Treasury auction this week, and it was successful, so it did not drive yield prices up because there was a demand to buy the treasuries. So because of that, and the Fed didn't have to buy a lot of the bonds back yet, or at least at the auction they didn't have to buy back the bonds. So, not direct monetization in front of people, at least. So because of that, commodities look to be, the precious metals at least, look to be taking a slight breather for this week. They did make an attempt, like I said earlier in the week, but in terms of fundamental analysis, in the last week alone, gold inventories are up a couple 100,000 ounces at the GLD, or at least they claim to be up a couple 100,000 ounces of gold at the GLD. Since January, gold inventories at the GLD have increased, I believe, about 5.7 million ounces since January of 2010. And silver inventories have actually decreased as they've been taking silver ounces out of the SLV. And that's even more than gold that they've been extracting silver ounces from the SLV. So they are taking ounces of silver out of the SLV. I guess these are industrial users who own SLV shares, or these are people from the COMEX who own shares of SLV and need to move the silver somewhere else. It's the hot potato. So if you follow Ed Steer's Daily Gold and Silver or GATA followings, you will be able to keep up with that. Ed Steer has a free daily research email newsletter at EDSTEER, Daily Gold and Silver from Casey Research. That's where I'm quoting a lot of the statistics from. So it's very bullish long-term for silver as they continue to extract. And gold, I think this is also a pretty good sign. But I'm obviously more bullish on silver than I am on gold. I like both, though. Okay, oil is slightly up, I believe, from last week. Oil was barely above $70, I believe, last week. I'll take a look at the chart later. But oil closed in the mid-70s, around $74 a barrel for this week, which is pretty good. Natural gas is slightly moving up, despite, the supply glut. So to me, at least, from a fundamental standpoint, I'd say the Chinese are probably stockpiling. That would be my guess, because normally natural gas prices are seasonal. So during the summer, natural gas tends to be at its lowest point because natural gas is used the most for heating stuff during the winter, especially in Europe, which is completely reliant on Russian natural gas. So as far as that goes, I think I've broken down the precious metals markets pretty well. Anything with an industrial component took a hit. So silver, platinum, and palladium were down this week, while gold was up very slightly, and I already told you about the breakout. The base metals are down, but like I said, I think they're consolidating, and I think they're starting to put in a nice bottom here. China has already started to hint, and articles are coming out about them increasing workers' wages slightly, which will give them more purchasing power and allow them to buy more goods and services. So that means they're going to be buying more basic stuff, which probably means like better food and some electronics, maybe a computer or a cell phone, maybe an iPad or a knockoff iPad or something like that. So this is the type of thing we watch. The dollar has also been showing good strength relative to the other currencies in the dollar index. And like I said in one of my articles that I wrote about the dollar index being misleading, a lot of non-professionals don't realize the dollar index is so misleading. So they think the dollar's showing a lot of strength when it's not. So they're going to be apprehensive to get into the commodities. But I'm 100% sure that as a long-term investment, commodities are the right way to go. Because of inflation hedges and also because of emerging market demand growth, where people want better food, people want more electronics, people want to, especially in China and India, move out of the countryside and go live in a city and have more Western civilized cultures. I am currently writing an article about BP, whether or not I think it's a good investment or a short candidate. I've been doing a lot of research on YouTube, pulling off some short video documentaries and researching some other articles. I've also been digging into BP's fundamental, doing some fundamental analysis on BP's balance sheet, taking a look at some of their cash positions and some of their total assets, total liabilities, shareholders' equity, etc. And hopefully by the end of this weekend, I will be releasing that article for all of you guys, because I've been asked a number of times if BP is a good buy here. There's, because of the high dividend yield supposedly, but I'll talk about that in the article. I don't want to talk about that anymore. I need to preview it and leave you wanting something to check out the article when I post it on my blog. So I have that coming down the pipe. Probably going to ask Mo Dawood to write, to do a technical analysis chart of the BP blog. And then after that, I have an alternative energy article that's sent into the editors, so hopefully that'll be out soon for you guys to enjoy. It's going to talk about peak oil and other stuff. But in general, I mean, I didn't look at the soft commodities today. I just took a look at the energy and the metals for you guys. And I'll be back next week. So everyone have a great weekend, and I'm going to try to have a great weekend. And it's Mo Dawood's birthday, or it was a couple days ago. So everyone say happy birthday to Mo Dawood and post on his wall. And definitely take a look at his blog. It is the Mo Money blog. www.momoneyblog.com. Okay guys, bye.